2, continued special measures to preserve stability in the foreign exchange market, including directly supplying the foreign exchange needs of selected entities in the energy sector. As is customary, I will now review some of the economic developments over the second half of the 2025-26 fiscal year and discuss the economic outlook in more detail. Domestic inflationary pressures increased during the October 2025 to April 2026 period. Jamaica's annual point-to-point inflation rate at April 2026 was 4.3%, higher than the 2.1% recorded at September 2025, but still within the bank's target range of 4 to 6%. The higher price levels stemmed from increased petrol prices and agricultural food inflation. Core inflation was 4.1% at April 2026, slightly above the 3.9% recorded at September 2025, indicating relatively contained underlying inflationary pressures. Economic activity weakened during the review period due to the adverse effects of Hurricane Melissa. Real GDP declined by 7.1% for the December 2025 quarter, compared with growth of 5.1% for the preceding September 2025 quarter. The contraction was broad-based, with the largest declines recorded in mining and quarrying, accommodation and food service activities, electricity, water supply and waste management, agriculture, forestry and fishing, and manufacturing. For the March 2026 quarter, the bank estimated that the economy declined in the range of 4 to 6%, a slower pace of contraction compared with the previous quarter. The improvement primarily reflected a slower pace of contraction in the category agriculture, forestry, and fishing due to improvements in production. The electricity, water supply, and waste management industry is also estimated to have contracted at a slower pace, reflecting post-hurricane electricity restoration. On the international scene, developments in commodity markets were mixed amid continued geopolitical tensions and global demand uncertainties. For the period, the 1st of October 2025 to the 27th of February this year, which is right before the start of the Middle East conflict, average crude prices declined by 15.6% relative to the previous 12 months, reflecting higher global supply conditions and weaker demand. Since then, over the period of 1st of March to the 20th of May 2026, which is a period of the conflict, average crude prices increased by 59.4% compared with the average prices immediately before the start of the conflict. Similarly, average grains prices increased by 8.3% during the period of the conflict to April 2026. Although U.S. LNG prices are lower than a year ago, there has been an increase of 8.7% since May of 2026. Despite concerns surrounding changes in U.S. trade and immigration policies, the impact of Hurricane Melissa, as well as heightened tensions in the Middle East, Jamaica's foreign exchange market remained relatively stable during this review period. At the 26th of May 2026, the exchange rate had appreciated, say that again, had appreciated by 1.5% on a year-over-year basis to the level of $157.9 to $1 US. This compares to a depreciation of 2.3% over the previous 12 months. The foreign exchange market has been supported by the bank's strategic use of its foreign reserves to augment US dollar supply to the market, which helped reduce volatility. Jamaica's external position remains strong, with gross international reserves amounting to approximately $6.5 billion US dollars at the 26th of May 2026, representing 138.5% of the level assessed to be adequate. The negative impact of the global political and economic climate on the country's external accounts is projected to be significant, with the current account balance expected to deteriorate over the near term. This deterioration will largely result from higher imported fuel prices and increased importation to facilitate the economy's post-hurricane infrastructure rebuild. The deterioration also reflects the adverse impact of Hurricane Melissa on the tourism industry. In this context, the bank anticipates that the current account balance will fall within a range of a deficit of 0.5% of GDP to a surplus of 0.5% for the financial year 2025-26, compared with a surplus of 3.0% recorded for the financial year previously. Given the high level of uncertainty surrounding the duration of the conflict in the Middle East and the extent of damage to critical oil and gas infrastructure in several Middle Eastern countries, recovery is anticipated to take several months or maybe even years. Against this background, over the June and September 2026 quarters, domestic inflation is forecast to trend upward from 4.3% at April 2026 and is projected to breach the upper limit of the bank's target range of 4 to 6%. This will be mainly driven by supply and cost pressures, including increased energy and transport-related inflation resulting from rising crude prices, and secondly, the second round or latter impact of higher energy-related inflation on the prices of other goods and services, coupled with higher spending related to the necessary post-hurricane reconstruction. The extent of the inflation range breach will be determined by the severity and duration of the conflict, which remains highly uncertain. As geopolitical tensions ease and global oil supplies return to normal levels, headline inflation in Jamaica is forecast to gradually moderate and return to the bank's target range. The risk to inflation forecasts are skewed towards inflation being higher than projected. The main upside risk is a more extended conflict in the Middle East, resulting in continued international commodity prices being high and their subsequent impact on domestic prices. In addition, adverse weather conditions, including the El Nino effect, could place upward pressure on agricultural prices. Higher than projected inflation expectations could also contribute to higher inflation. Further, higher inflation may arise from a stronger than anticipated impact of more domestic spending amid the post-hurricane recovery activities. On the downside, the impact of these factors on prices could be tempered by reduced demand because of energy costs taking up a larger share of consumers' disposable income. Finally, looking at developments in the real economy, with the expected gradual recovery of the economy for financial year 26-27 and further on 27-28, real GDP growth is forecast within a range of 1 to 3%. This follows an estimated contraction in a range of 1% to 2% for the financial year 25 to 26. Ladies and gentlemen, the recent geopolitical tensions have introduced significant uncertainty and challenges to the economic outlook. However, Bank of Jamaica remains committed to its primary mandate of maintaining price stability. Madam Chair, this concludes my final formal report. However, as this is my last report to the committee, I would like to seek your indulgence for a few brief moments of reflection on the challenges and stewardship of the bank over the past 7 years. Thank you, Madam. The period of my tenure as Bank of Jamaica Governor from August 2019 has been one of considerable exogenous turbulence. There has been a global pandemic. There's been supply chain disruptions that drove global inflation. We've had 2 major hurricanes, and we've had the wars in Ukraine and the Middle East. Through each of these tests, Bank of Jamaica held a steady course on our core mandates of price and financial system stability. The record speaks clearly and positively. Over the period September 2019 to April 2026, Jamaica experienced average annual inflation of 6%. If we take out April 21 to March 23, the period of global supply chain inflation, Jamaica's inflation rate averaged 5%, well within the target range of 4 to 6%. The bank continues to take on board the experiences and views of consumers and businesses in an enhanced inflation communication program, which includes regular stakeholder consultations across Jamaica. With regards to financial stability, despite profound international disruptions in recent years, we have had no bank failure in Jamaica. We do not take this fact for granted. Comparatively, the Federal Deposit Insurance Corporation of the United States reports that there have been 19 bank failures in the United States over the 7 years 2019 to 2026. Beyond our core mandates, we have made material advances on several fronts. The foreign exchange rate has remained relatively stable, depreciating at a moderate average of 2.9% per annum, broadly in line with the inflation differential with the United States, and thus preserving Jamaica's external competitiveness. Gross international reserves have risen from $3.6 billion in 2019 to $6.5 billion as at May 2026. Through the leadership of the Bank of Jamaica, in 2024, Jamaica was removed from the FATF Grey list of countries with deficiencies in anti-money laundering and counter-terrorist financing systems. The bank also contributed to the government of Jamaica's fiscal balance. Over the last 7 years, the bank declared and paid dividends exceeding Jamaican $50 billion to the Ministry of Finance. We also introduced modern polymer currency notes and have made considerable progress on the digital payments infrastructure, JAMDEX. And despite the slow response of the commercial banks, we are poised to further roll it out for a phone-to-phone transactions. At the same time, we are advanced in developing an electronic Know Your Customer framework, which will allow bank customers to move accounts between institutions with greater ease. The Twin Peaks supervisory architecture has been advanced and will soon be ready for cabinet consideration, laying the groundwork for the most comprehensive reform of the Jamaican financial system in recent times. This will include greater financial resilience for all financial institutions and the introduction across the financial sector of modern, comprehensive customer protection and market conduct standards for all entities. In recognition of some of these achievements, Bank of Jamaica received 2 Best Communication Initiative Awards from Central Banking, one of the most respected organizations in our field. BOJ also received the Best Central Bank Award and an A grade on the Central Banker Report Card from international publication Global Finance, a distinction that places Bank of Jamaica among the highest rated central banks globally. Madam Speaker, I wish to record my sincere gratitude to the members of the Board of Directors, whose hallmarks have been diligence and integrity in the governance of this institution, and to the members of the statutory committees, whose counsels have been invaluable to our monetary and supervisory work. I also thank the Deputy Governors and the staff of the Bank of Jamaica. It has been my privilege to serve alongside them. In the discharge of their duties, the men and women of BOJ have demonstrated professional excellence, and I believe this places them among the finest central bankers in the world. I also wish to acknowledge Dr. the Honorable Nigel Clark for the bold and consequential decision to establish an operationally independent Bank of Jamaica. That reform has served this country well, and its value will endure. It is to her credit that the current Minister of Finance and the Public Service, the Honorable Favour Williams, continues to place confidence in the efficacy of this operational and monetary policy independence. I would not leave this chamber, Madam Chair, without full candor. The weakness of the monetary transmission system remains a structural challenge. In a banking system as concentrated as ours, the pass-through of monetary policy signals to credit and lending rates is constrained. This will not resolve itself quickly, and it is a challenge the next governor will have to tackle. Madam Chair, it has been the honor of my professional life to lead this fine Jamaican institution for almost 7 years. I leave with deep gratitude for the opportunity and with full confidence that Bank of Jamaica is well positioned to continue serving our nation with distinction for generations to come. Thank you.
Usually at this segment, we would open for deliberations. Let me say thank you for providing not just information required for today's standing Finance Committee meeting, but having taken the time to do a comprehensive review and an assessment of the performance of the institution under your stewardship since 2019, August 2019, when you took the position as governor. I know today is your last formal session with us here at the Parliament, but I do look forward. I know the Minister of Finance must have something planned for you, and hopefully all of us will have an opportunity to meet and spend a little time and talk. I observe you're indicating that you are now retiring and you're not going to unretire. Well, I'm sure there's still more to come, and you may be surprised to see us still calling on you for your continued support and dedication to nation building. So Member Bunting will lead off in the deliberations. Members, at about 1:09, your emails have been updated just once again, as we're having issues with the documents required for your perusal in respect of the review with the BOJ. So we sent again, just in case members do not have a copy. Member Bunting?
Thank you, Madam Chairman. Representing the opposition spokesman on finance, as well as myself here today. And before I jump into the technical questions, I would just like to offer our thanks to the governor for his service. And I think he has set a good example for his successors, not just in terms of his technical competence, but in terms of the temperament that he has brought to the role, which is appropriate for a central bank governor. And I want to thank you. The governor is somebody I had interacted with in our earlier professional capacity, so not somebody new to me, but I want to acknowledge that he has done a very good job and wish him all the best in future. And I think he has particularly the combination of technical competence and temperament has given your search committee a good model to follow as they search for your successor. And I hope they find a suitable one. Now, having said that, Governor, you know that I'm not going to go easy with the bowling on you. You taking the statements you made here and also some comments you made recently at engagement opportunity luncheon in Mandeville, and I want to recognize our appreciation, and I'm speaking on behalf of the rural MPs, that engagement is not just in Kingston, but that you've taken it out into the rural areas across Jamaica, and we appreciate that. But in your comments here today and at that event, you made it clear that imported inflation accounts for the majority of the projected increase in prices. And you also acknowledge that tightened monetary policy is less effective on imported inflation than it may be in terms of inflation coming from fiscal or expectations. So in that context, and given that we're in a recession, given that we're struggling to recover from Melissa, why should Jamaicans bear the burden of higher domestic interest rates, which would flow from your, your watching brief of what is going to happen with inflation in the next 2 quarters? That's the first question.
Okay, thank you for that question. Yes, so most of the inflation that we are experiencing now is imported. And normally we would use the tools of interest rates, monetary policy to combat inflation generally. But because it is imported, the exchange rate is very important. And so we have put a lot of focus on that. So you would say that we are trying to fight inflation with 2 main tools. One is the exchange rate, keeping that fairly stable, preventing it from being volatile, because we all know that if that exchange rate gets out of hand, it would drive inflation considerably. But secondly, we have to watch out for second round effects of inflation. So imported crude price goes up, transportation prices go up too. The person taking the transport decides to up their prices, and the person who they are selling to decide to up their prices also. Those are the second and third round effects that we have to guard against. And so holding the policy rate is our kind of defensive measure against those second round effects. But primarily we are fighting this imported inflation with the exchange rate being as stable as we possibly can make it.
You made a comment, I think you had said that one of your major disappointments is the lack of competition in the commercial banking sector and the implications that has for monetary transmission. Granted, you are on your way out, but what is it that the Bank of Jamaica is doing? As I'm assuming they're actively working on increasing competition within the banking sector. Can you say what the bank is doing in that regard?
Right. Well, that's a good question, because what we have are two banks that dominate perhaps 60% of the industry, and the other 8 or so share up the other 40%. One of the strategies Bank of Jamaica has pursued in years even before my tenure has been to grant more licensees. And so we have moved from maybe about 6 banks to the 10 that we currently have. But what we have found is that the smaller institutions are not sufficiently competitive with the larger ones. And that is because they need the cheaper deposit base in order to be competitive. We have discussed other means of creating more competition, some of which I'm not able to elaborate on here, but which are in train and will be announced by the appropriate person. But the truth is that that concentration is not getting any less. It is getting more, and it is a challenge that somehow between the Bank of Jamaica and the Parliament and generally the financial sector, we have to come to some solution.
Governor, from as far back as the 90s, in my first term in Parliament, I raised the concern that the Bank of Jamaica and the government, by where it places its consolidated fund account, is contributing tremendously to that oligopolistic or duopolistic situation. Is that within the Bank of Jamaica's control or the Ministry of Finance's control?
We have spoken with the industry about it, and we have spoken with the minister, and we have done research on it. And remember, Minister of Finance has an accountant general, I believe, who holds the central account, and that was done many years ago for purposes of efficiency. Part of the problem is that the 2 large banks have the network distribution that is needed to pay government, to make government payments all over the island. It is more convenient to use them than to use the smaller banks that are concentrated in Kingston mostly. That's not to say that some government activity doesn't give support to the smaller banks, but I think that between the accountant general being the major holding of the cash float of government in the Bank of Jamaica and the distribution of the network island-wide of the big banks, that initiative is not as effective as one might have thought at the beginning.
Okay, and well, this is my final question in the first round, Chairman, if I'll allow others to go, but I will have a couple follow-ups.
I am chairing the meeting today, and you will not have another chance for any other round.
Oh, I won't.
So, could you be so kind as to ask all your questions?
Okay, well, I have a couple more then. Governor, the April inflation, I think, was at 4.3%, core 4.1%. I don't know if May's figures have been published or you have an estimate of it.
We don't. Starting doesn't publish until about the 15th.
But so far, the inflation is remaining within the target range. In terms of the credibility of the inflation forecast, I also noticed that in the report it suggested that there may be some upward movement in inflation expectations. And could you say how your communication around that issue, I'm assuming that communication is one of the most powerful tools you have to address the expectations issue. Could you say what you're doing in that regard?
Well, when we have the briefing, that is a major opportunity, and whatever press coverage follows from that, that is a major initiative on our part. I know that 4.3 was surprising. In fact, I had a bet with my good friend, Dr. Wayne Robinson, who thought it would have been higher. So he still owes me. But we had some good news. He did, I didn't. But we had some good news from the electricity sector, and agriculture continues to show some better prices, and that has held the rate so far. But note that in the US, I think it's just today, their rate came out 4.2%, and that's up from what, 3.8. So I expect that we will see increase in our inflation rate.
Okay, the final question. In other territories or other countries in the Caribbean, like Barbados, which have a sort of fixed peg in terms of their exchange rate, they have somehow managed to keep inflation relatively low, keep interest rates relatively low, and I'd like you to explain what's the difference, why they have been able to do that. In fairness, our exchange rate has not been moving how it has been in the past, but we don't have that anchor that the Eastern Caribbean has, that Barbados has, and other territories in the Caribbean have. What is the advantage, given now that we have broken the back of inflation expectations in Jamaica relative to previous decades? What's the advantage of the floating exchange rate versus what they seem to be managing very well, especially from the perspective of interest rates being much, much lower, lending rates being much, much lower than they are in Jamaica?
Yeah, so interest rates are lower, and their inflation rate is low, and their reserves are lower. Our reserves, remember, is the envy of the whole of the Caribbean. You will remember the day when Trinidad had 2, 3, 4 times our reserves. You could even remember the day when we had 700 million of reserves. We have 6.5 billion of reserves. But in addition to that, we have the confidence of the Jamaican public, because in the commercial banks, and this is just the commercial banks, not the non-banks, there is another 5-6 billion of deposits, US dollar deposits sitting there. So what we have is a country that people have confidence that their foreign currency is safe, that they can get it when they want it, and that they are in a country where the reserves are strong and stable. I just had a meeting yesterday with someone representing a large institution that is about to put 500 million US dollars in Jamaica in one form or another. And what they say is, compared to the DOMREP, Trinidad and elsewhere, because they can access their dollars at any time, they feel comfortable in making that investment. So why they're bringing it here is because the company that they own here is doing so well that is the best use of their capital. Minister, I don't know if you know who I'm speaking of.
I see Member Crawford. Do we have any more questions on this side? Member Russell. And then Member Tufton, Member Green, in that order. After which, it will be over to Minister Williams, and then we wrap up and prepare for the House sitting. So, Member Crawford.
Thank you, Chairman. And sir, I too thank you for your contribution and to your team for the work that they're doing. Within the report, I saw that the projection for inflation over the next 2 years was expected to be likely outside of the the parameters, the 4 to 6%. And indeed, the risk was projected to the upside, meaning it could be worse than the projections on the prevalence of evidence. Based on that reality, what is the likely impact on pensioners, unemployed, etc.?
Yes, I mean, every time we think of our mandate, that in fact is a group that we are very sensitive about, the pensioners and the fixed income earners, because nothing destroys their purchasing power more than inflation. Right, so we don't expect over the next 2 years, for the whole of that period, that we will be outside of the 4 to 6% corridor. We're not certain, because who knows what will happen in the Middle East or anywhere else. But as it stands now, we are optimistic that that Middle East situation will settle down. We might have a bumpy 2 quarters going into the rest of this year, and then we are hoping it will start to calm itself down. So if we go out of the 4 to 6% corridor, it's likely to be in the next 2 quarters. Hopefully not much more than that afterwards.
The projections that I've been reading, Real Oil is suggesting up to 95 for the rest of this year. And I saw where you indicated it in a region of 82. So is that for the next 2 quarters, your perception is that it should be down thereafter?
Yes, we are hoping that the Middle East situation will settle down within the course of this year, this calendar year. No, that doesn't mean oil will respond immediately. It may come down a bit, but not where it was before at $70, because there's infrastructure that's destroyed. And indeed, you know, it takes a ship something like about 11 weeks to get from the Middle East to a refinery for it to become fuel for us to get. So we have a bumpy period between now and December. We can only hope that it won't be much longer than that.
Okay. Is there any recommendation of policy possibilities to reduce that second impact? That
the second round impact, well, that's where interest rates should help. Because what we do is, by keeping interest rates at 5.5%, it dampens the appetite for people to borrow. And if people don't borrow as much, it means that demand is not stimulated as much. So, you know, we have a tough job of managing inflation, but not harming the economy.
Yes.
But our first task is to manage inflation. If we can do so and stimulate the economy, we're happy to do that. But the first responsibility is manage inflation, even if you have to keep interest rates fairly high for a period of time.
Thank you. So when I saw that, it carried a question to my mind, because it was reported in this parliament that there is about 2.7 billion US dollars, approximately 400 billion, that's available in cheap credit to the private sector, coming from the multinationals. How would that render your 5.5% efficiency?
I'm not sure what you're referring to.
The Prime Minister reported of a 6.7 billion available from the multinationals.
Oh, you mean for the recovery?
Right, of which a portion was available to the private sector. I think 2.4 billion was available for private sector borrowing.
I'm not sure about that availability. But generally speaking, all of those funds for reconstruction have the potential effect of pushing inflation up, because it increases demand. Yeah? A lot of that demand, however, is going to be imports.
Yes.
But nonetheless, cost of labor would rise, and the cost of any other domestically produced good that goes into the reconstruction, that is also going to be under pressure from the reconstruction effort.
Right. So within that reconstruction effort, in your projections, did you have a percentage of the capital budget usage, or did you expect full usage, partial usage?
Yes, we do have the capital budget being spent, and it does have a contribution to the inflation. when we project inflation, there are different factors that contribute to it. And yes, the capital budget will contribute to the extent that it is executed more fully than we have in the past.
Yes.
And which is what we expect that it will be.
Okay. Now, as it relates to food inflation, was there a projection? I didn't see a projection. I don't remember seeing a projection for food inflation in specific.
Right. So imported grains in particular would be a component of that projection that we have made.
Both in feed and in consumption, rice, etc.
Right, in flour and all of that. And that is balanced by domestic agriculture prices, yeah.
So was there a projection of food inflation as versus the average inflation? Was there a...
Yes, food inflation is a component of projected inflation.
I understand. I'm really asking if what is the projected rate for food inflation specifically over that same 8
Let me
quarters?
ask Wayne to answer that.
So food inflation will account for the bulk of the movement in overall inflation. Of course, we're looking at a wide range in terms of the overall inflation outlook because of the uncertainty. But agricultural food inflation, whilst we've had good outturns so far, going into the summer season, that will begin to pick up. And of course, it will also reflect the impact of higher energy costs on transportation and so on. That will begin to feed through to agricultural food inflation as well. But also processed foods as well, non-agricultural food as well. It's going to reflect the impact. And this is what we call the second round effect. And that typically, food inflation, food is a significant component of the basket. So that typically is a significant component.
Okay.
I don't want to give a specific figure because, I mean, we're just operating with a high degree of uncertainty and a high margin of error.
I understand. I was hoping that the projection, but we will consider that. However, I also am asking because there's a portion of the society that the highest component of their income is consumed only in food and isn't really reflected in the basket in its totality for which average inflation considers. So I wonder as well if there is any study in the BOJ for the variation between quintile 1 and 2 inflation as versus average inflation. Is there any perception of what the quintile 1 in inflation reality is as versus average inflation as a reality?
Well, I don't know if Statin does it because they're the ones who provide the inflation figures, not us. But maybe PIOJ has it too.
And would those realities trigger your action or just average only?
We deal with the average, but we do have a sensitivity to the fact that the majority of Jamaicans, the food would be a larger component of their expenses.
In the report, it indicated that the private sector was expecting 7.1%. Well, that was their estimation?
Yes. So we have a group of persons in the private sector that represent major manufacturers, importers, and they're a consensus group. And we ask them to advise us, tell us what's their opinion, because that informs us a lot about expectations. Because to a large extent, they are the price setters. They also have good knowledge of forward prices in the particular industries.
Supply
that
side
they're in.
and
Yes. And they were trending down towards 6 or so until we ran into the Middle East conflict, and it's jumped up to 7.
So is there any effort or is there any possibility to mitigate against preemptive price increases based on those expectations that they hold?
Well, I tell you, I would say about 3 or 4 years ago, when you asked anybody in business, what is the main factor that drives your future pricing? That is your expectations. What do you think they would say? The exchange rate. Nowadays, if you ask them, they will tell you it is the price of commodities. So the exchange rate has receded
as
in
an
terms-
influencer.
All right. So that's why I keep saying, you know, that tool that we have of holding the exchange rate in a manageable way is a vital tool in inflation management.
Now,
All right, Member Crawford, leave some questions for Member Russell.
can I just ask one?
One more?
Yeah. Boy, you know, Ram for curtail me, you know. Now, despite the revaluation of the dollar recently, a slight revaluation, and your continued intent and willingness to participate in the foreign exchange market, including offering access to major consumers of foreign exchange. The report also suggested that the private sector expected devaluation. Is there a reason for that?
Well, I think generally the trend is that the dollar will come under some pressure. Why? You can see it in the current account, which we say is going to turn from being generally quite positive, 3% of GDP, which is very substantial, to maybe a deficit of about 0.5. So we expect that because all of the infrastructure rebuilding equipment
I'm listening, sir.
is
I'm
going to
begging
be
for another question.
is going to be imported, and that's going to put pressure
Member Crawford,
on the exchange rate.
no further questions yet. No more, no more.
Can I get the
Governor,
answer, please, though?
No, please.
I can't get the answer either.
I manage the proceedings in the House. Governor, I am going to ask you and the team from the Bank of Jamaica to withdraw for a little. We are going to commence the sitting for 2 o'clock. That was a time named instead of a time and date to be fixed. And then what we will do is just come right back into standing finance so that we can wrap up. We'll suspend the sitting and come back into standing finance, and then Member Crawford can get to ask a couple more questions. So, members, crave your indulgence. Marshall. Marshall, I don't know how easy it is, but yeah, I guess.
Again yesterday. Yo, I know I mess up, but I can't wear them something there road and I expect me to react. I know I'm jealous and fool and easy to lose my temper, but call me back here.
Still not get tired.
Hey, girl, think me have to call your phone? You know who you deal with? You think I want lick me again next time? Eh?
It doesn't have to be this way. You can leave an abusive relationship. Just call 876-553-0372. We will help you.
Jamaica, let's spread the word around to let the world know that we are proud to be one republic. We on the road to republic. Well then, let's propel we nation moving forward in a new direction. True independence, that's the projection. No more dependency, it's the best plan. Yes, we know what's best for us, cause we want we country prosperous. So make we just pull together as the general public while on the road to republic. Jamaica, let's spread the word around to let the world know that we are proud to be one republic. We on the road to republic.
A message from the Ministry of Legal and Constitutional Affairs.
We on the road to republic.
Welcome to PBCJ's live coverage of the lower house. I'm Simone Absalom Gale. The session will start with prayers followed by a roll call of those in attendance. This is usually followed by questions and answers to questions. Statements